I spent a bunch of my career when in the early days of electronic trading. And I used to say that, we will have succeeded when people just take the word electronic out. In this space, it's the same thing. Like at the end of the day, investors don't care. Like, what is the underlying technology that I'm using to do this? It's going to be use cases and applications that never existed before, that are good for investors, that are good for markets. We're going to just see a whole new set of use cases that are unlocked that are going to be powered by and built on blockchain, but nobody's going to care.
Today's Talking Tokenization guest is Brett Redfearn, the president of Securitize and friend of the show. Brett, welcome on.
Hi, it's great to see you, Jacquelyn.
It's great to see you too. We always like to start off this series by asking people, how would you define tokenization?
Well, I love this topic and happy to talk about it. So, tokenization is just a way of representing traditional financial assets like stocks, bonds, real estate, blockchain, in a different way. This is a meaningful upgrade to financial market infrastructure. It's a different ledger, it's a better ledger. And it's something that enables us to modernize capital markets with faster settlement, improved transparency, programmability, broader global access. So it's a pretty awesome upgrade that's really going to unlock a lot of benefits for issuers, investors, and market infrastructure.
Yeah, I mean, Brett, you've spent years inside of the traditional financial markets, the regulatory side of things. Prior to working at Securitize, advising at Securitize, you served as a director of the Securities Exchange Commission Division for Trading and Markets. And then you also had a variety of capital market leadership roles at like JP Morgan, most recently Coinbase too. And now you are the president at Securitize. How would you kind of describe the evolution of capital markets with your past experience in mind? Because you have a very unique vantage point that, a lot of people don't necessarily get to have.
Yeah, I mean, it really has been an awesome set of experiences over the years because, being focused on market structure, I define market structure as sort of this intersection between technology, regulation, and trading practices, right? And so in any asset class, you will have a way in which people are doing things, and a new technology comes to bear, and all of a sudden, trading practices change, regulators try to catch up, regulation comes in, and it's like a wheel that goes around and around
Yeah.
between technology trading and regulation. So early in my career, I was actually on the American Stock Exchange, working there, managing the transactions business when it was still a floor-based market, right? So it was completely manual. It was the guys in the colored shirts running around, trading in a very old school way. They literally had mnemonic tubes like on the side of the thing from the days when they would shoot messages up to
Yeah.
people at the balcony. And
Hmm.
I was there when the markets went from floor-based to completely electronic markets, right? So all of a sudden, the electronic communications networks came in, and you saw electronic trading completely transformed. The New York Stock Exchange floor went from a bunch of traders to a totally electronic situation where people actually didn't even necessarily always have to be on the floor. So that process has happened in multiple different asset classes. You saw it happen in equities, you see it happen in fixed income, you see it happening in the FX markets. So all the different markets continue to evolve as technology changes. And for me, it's just such an interesting set of dynamics. So when blockchain technology kind of came to the fore and we started seeing what was capable with blockchain, with the composability, with the programmability, it's just awesome to see, what it did initially with crypto products, and then how gradually that's able to be brought into traditional financial products. So, this is really the next stage of evolution of technology and regulation, and it's something that is, I think, potentially the most transformative one yet, right? So electronic trading, super transformative, but what's happening now really has the potential of bringing our markets to another better place. And we haven't seen anything like it for 20 years since Reg NMS transformed the equity market.
So this is the biggest and newest innovation in your mind, like with everything that you've kind of seen throughout your career.
Yes, definitely. I mean,
Yeah.
like, so the last one would have simply been computerization, right, and electronic trading and how that changed
Hmm.
floor-based systems. I mean, it used to be, you'd send an order to the floor and people wouldn't get a report back for a long time. It was like, wow, I can get a report back in 5 minutes. And then it was like, wow, I can get a report back in 1 minute. And then it was like,
Yeah.
wow, I can get a report back in 1 second. Now it's like trading the equities markets happening in, microseconds, if not nanoseconds. And here, that was a big change. But here it's really another substantial change that just unlocks a lot of other possibilities for investors and for issuers.
Yeah. Do you think the regulatory landscape today and the capital markets landscape, so maybe the more traditional market side of things, is ready for this digitized financial product and digital asset securities to take the forefront of the market?
So I think the question is, not only like right now with like Paul Atkins as chairman of the SEC and Selig as chairman of the CFTC and the Trump administration. I think it's a sort of a bigger question of where we sit because, obviously when Paul Atkins became chair of the SEC under Trump and his second administration, we're seeing just 180-degree change in terms of where the regulatory environment is. So I think regulators now are extremely pro-innovation, pro-blockchain. They really want to see this evolution happen. However, I think it's important to think about, what happens in the next 2 years, right? We have a situation where, I think most people are expecting the House of Representatives to flip to the Democrats in the fall. The SEC kind of reports into the House Financial Services Committee. Who knows what happens in 2 years? And what we really want to do is make sure we build responsibly in a way such that regulators are comfortable with what's being built. They are comfortable with how this is evolving, and we don't have a pendulum swing back the other direction in 2 years. That's definitely something we all want to avoid.
Do you feel confident that the pendulum will stop swinging and it'll be more of like a positive outcome?
So it's interesting. I had and I don't want to get into the weeds yet, but I had a conversation just earlier today with somebody. We were talking about sort of what is permission and what is permissionless transfers, right? And so there's a question in sort of DeFi and in crypto, which is to what extent should assets be able to, freely move around markets and around the world without KYC? And, this is one of the questions that I think right now, I think there's a lot happening that has been quite permissible in a few areas that might actually be less permissible in a couple of years. And so, at Securitize, we're really trying to build in a way that's future-proofed and that is not going to experience some of that. And so, unlike some other entities which are much more focused on exemptions or no action or things like that from the rules, we've been very much trying to kind of work incrementally within the rule set as much as we possibly can, so that when we get 2 years from now, what we've built will continue to stand and to survive and to thrive.
Yeah. I mean, you've been through a number of our market cycles, and we've talked about this wave of financial innovation from the early days when you're writing things down on a piece of paper to now everything can be done in seconds, if not a millisecond, right? What has kind of convinced you from your position that tokenization has moved from, some theory or some testing pilot ground to something that institutions now want to be involved in, can no longer ignore, and kind of see as like the future of on-chain finance, essentially, or finance in general?
Well, I think we've spoken about this before, but, the biggest sea change is just the conversations that we're having with traditional financial participants. Like 5 years ago, and as you know, I was advising Securitize for 4.5 years before I joined as president. But 5 years ago, in some of the conversations we were having with most financial services firms, it was sort of like, yeah, we want to learn about this. We're interested in this. Maybe we'll try a POC. But it was sort of in these
Right.
innovation groups, that weren't necessarily sort of driving some of the businesses. And today, the conversations we're having are very different. They're very much about, we're building, we want to do a trade, we want to figure out how we can launch products, we want to figure out how we can do IPOs, we want to figure out a whole host of questions. So those conversations are very real, very meaningful, and people are truly building. I think part of that change was, there's been important catalysts, right? So as you know, Securitize did the Biddle Fund with BlackRock.
Yep.
That
I
was
was
an
going to bring that
example
up.
of, taking the treasuries and taking a treasury product and putting it on chain. And, prior to that being launched, the total assets on chain was actually pretty small, and the total assets in treasuries were pretty small. And we actually saw it go from something like $3 billion to $30 billion after that. So I think that was a huge catalyst. So BlackRock doing it, Apollo doing it, Hamilton Lane, KKR, a lot of these other things doing it. I think that's helped. And the other thing is, of course, the regulatory environment, right? So for traditional financial intermediaries, they want to see that we're not in a world where every time you try to do something with blockchain, you're getting a Wells notice, you're getting an investigation, or you're getting sued, right? And that has changed quite a bit. I think the messaging from this SEC is please innovate, go out there and do it. The statements that the commission has put out, that the CFTC has put out, the fact that the White House has a crypto task force, all of these things, I think, provide regulatory comfort that make traditional financial institutions much more comfortable about getting involved.
Yeah. And I mean, this has been years in the making too, right? I remember, and I've talked about this on the show before, but like back in 2022, I sat down with Carlos on stage, CEO of Securitize, during, I believe it was SALT NYC. And it was like Carlos, Avalanche, KKR, and it was just kind of like
I was
such
there.
an early,
I
you
was
were,
there.
and you were there too on stage,
Yes,
right? You were the fourth.
no, I'm not as
Yeah.
memorable,
Yeah,
I was there with
exactly. So you know
Carlos.
exactly what I'm talking about. Like, I remember that moment, and I was like, it was such a novel concept at the time, and like, tokenization wasn't a big conversation at the time, but it was still important, right? And then some people argue, FTX happened, and that kind of like paused development. But then I spoke to Max Stein recently, who's director on the digital assets team at BlackRock,
Right.
and he kind of said like, if anything, FTX was kind of like an accelerant to why we would need this more than anything, right? And so it was interesting to kind of see like the background evolution of all of this over the years. And then to your point on the front of BlackRock and the Biddle fund that Securitize did with them, I think that was like a very groundbreaking moment for the industry as well. Like that's kind of my perspective too. And now they're launching a second one, right? I saw that news recently.
Yes, they are. They're launching another one with us. We're very excited about that, and we love that
Hmm.
partnership. I would say about the environment and about FTX, quite frankly, regulation coming into the marketplace, it actually helps the marketplace grow, right? It has a place to land. It has rules of the road to go by. It has, we all use the word clarity, right? So we're hoping for
Yeah.
more clarity coming out of the hill soon. But all of those
Yeah.
things really do unlock the opportunity. But certainly BlackRock's leadership in this, and you've seen this, I think that one, it was right after we did the announcement of KKR, right?
Mhm.
So it's the healthcare fund that we tokenized. And it's just been a never ending evolution since then.
Yeah. I guess, Brett, a question I have for you too is like from early days of advising to president now at Securitize, why did you decide to take on a larger role? Like, what did you see happening in the markets that made you feel like this is the right time to step in and you really want to like be at the forefront of it there, opposed to just advising? I'd imagine advising has a lot of parts to it, but you know what I mean?
No, listen, I got to tell you, the advisory business was a lot of fun, and it was great because I had
Yeah.
6 or 7 different clients. I had stock exchanges, and in the blockchain space, it was interesting for me because I was trying to look at multiple parts of the ecosystem, right? So I worked with some market makers in crypto. I worked with some DeFi pools. I worked with some asset managers that were trying to tokenize funds, and I worked with Securitize and Carlos and that team. And Securitize was one where not only did I chair their advisory board, but it was a very integrated role. So I went to all of their offsites. I participated in a lot of their meetings. I was on their Slack all the time, engaging on different things. So it was, very, very connected.
Yeah.
I think every year or so, Carlos would reach out and say, "Hey, Brett, when are you going to come on in and do this more full time?" But the answer about why now is just the pieces are all in place, right? The pieces are all in place. The regulatory environment has really changed in a way where we're getting the clarity we need to build. The
Hmm.
institutions are ready to truly build on tokenization. The entities like Computershare, and you're very familiar with the partnership we have with them, but they understand that the technology is ready for an upgrade. Securitize, I mean, it helps that Securitize is very well funded, right? So they did a pipe, and now they did a SPAC, and they're doing a D-SPAC. So they're going to have a lot of money to really build and to grow into this environment right now. The level of interest in terms of the investors who came into those has been great as well. So I think the pieces just aligned. And the other thing is when you're an advisor, like it's cool to like opine and give advice, but you're not really building. Like you don't really feel ownership of things. And I think this is something where it's just such an interesting time and such an interesting opportunity that I really want to be a part of it. I want to get roll up my sleeves and get into the thick of it and really help them take this company to the next level.
I know in late May, Securitize reported its Q1 2026 results with the highest quarterly revenue for the company's history and total revenue hitting 19.5 million, up 39% from the prior year period. Carlos also mentioned an updated S4 has been filed, bringing the firm closer to the IPO. How would you kind of characterize the opportunity today for the firm? And then what would you say is driving that growth amid a broader bear market?
Right. I mean, it is exciting to see what's happening. It is exciting to see the way that they've been able to grow the revenues as such. We're seeing, we now have over $4 billion in tokenized AUM. So, and that continues to grow. I think part of the excitement and the opportunity is indicated by, my life since I joined the company is essentially being inundated with opportunities. Like the number of people who are calling who want to do something is pretty astronomical. And it's not just the number, it's the quality, right? So, Securitize at one point was looking at some smaller assets, smaller stocks and things like that. But one of the beautiful things about BlackRock is it's just such a major financial institution. So when we think about big financial institutions, big investment banks, large companies, all of these things, like it's coming, but it's coming in size, I believe, with sort of some of the major market participants in the space. And I just think that the growth opportunity is astronomical for this company.
If you're getting all these calls and inundated with requests, how do you guys pick and choose who to work with? Because now it's almost like the ball's in your court, which is a wonderful problem to have, right?
It's a really good question, and it's a hard
Yeah.
question, right? Because
Yeah.
nobody wants to. We're in a very competitive space, and nobody wants to turn down opportunities. And there's a
Yeah.
little bit of, well, if we don't do it,
But you also want to take the right ones too, right?
that's right. You
Yeah.
got to pick the right ones. And listen, part of that is, one aspect is that, I had a meeting yesterday and I won't get into the details of it, but part of it is we try to assess the readiness of the parties that come to us, right? There's a
Mm.
lot of people who are still fishing, right? And people initially, this is what I was saying before about the people who are sort of interested, but not really ready to build and do something meaningful. And so, like, we'll have those conversations with people who are interested in learning and just kind of fishing to see what the opportunity is. But the ones that are best to engage with are the people who come and they're like, we're ready to do something. We want to launch a project. We want to trade. We want to provide liquidity. We want to, there's many aspects of the ecosystem. So part of it is just, what is the readiness that they're coming with? Second one is I like to believe that we'd like to think about people who are somewhat regulatory aligned, right? So we've never really been a company that is, asking for forgiveness instead of permission. We kind of try to work within the regulatory structure and do things in a way where we're less likely to run afoul of the rules, not just now, but in a couple of years if things change. So I think some regulatory alignment also helps, that people are trying to do things in what we would believe is the right way. And obviously, I think we're looking for different aspects of the ecosystem, right? So we're not just tokenizing assets. We are operating a broker dealer. We're operating a transfer agent. We have a registered investment advisor. We have an alternative trading system. We have a marketplace, right? And so we're looking at the whole ecosystem, and we need to make sure that when we bring assets to the table, we also have a real idea of what is the secondary market environment, who are the liquidity providers, and then who are the partners we need to have sort of on the DeFi side, and with sort of vaults and pools and other things like that answer that question, why tokenize, right? Where is the utility in doing this? So there really are a number of different facets that we have to look at here, but a lot of it is just simply like, who's real, who's ready, and who wants to make something happen. And when that's the case, it's a lot more fun to engage, because it's fast moving space and we like to get things done, sooner rather than later.
Yeah. What would you give as like advice for first steps for teams who are interested? Because we have a lot of banks and traditional firms that listen to the show anecdotally. They've told me, and so they're like, they're paying attention, right? But some of them might not know where to start. So what would be kind of your direction there? I'm sure you have those conversations too, where it's like, hey, we're interested, but we don't really know what to do here. Like interested in tokenizing or getting into the digital asset sector and like being a part of this whole on-chain finance economy. So what would be kind of like your advice on helping them like get educated or even start to come up with a strategy here?
Well, it's funny. The thing that comes to mind is I have some friends in traditional finance who will like reach out and like, I really want to get into this tokenization thing. It's
Exactly.
such a
Yeah.
hot topic. It's super cool. What can I do? And I'm always like, well, I always say, like, have you experimented? Do you have a wallet? Have you bought assets? Have you tried to stake? Have you tried to post something in a pool? Have you
Mm,
played around with vaults? Right. So to me, one of the things is like I really think people need to just try it out and get involved and get dirty a little bit with the with going through the process. It's funny. I've actually recommended your podcast, right? So I'm
there
like,
we go. Thank you.
you should listen to podcasts. Like it's amazing how
Yes.
how much content here and
Hmm.
elsewhere is available. And these conversations are, I do it a lot. I'm a cyclist, so I'll go out on long bike rides, for a few
Yeah.
hours. And I usually load up like 3 or 4 podcasts for the ride because I just learned so much in that. So I really think that's another thing for people who are kind of in that space. And then, I actually believe that, a lot of the events, I mean, my God, crypto and blockchain in this space has so many damn conferences. If I could go to all of them, I don't think I would do
Yeah, you
anything.
would never be home. Yeah.
There's just something going on all the way. And by the way, the
Yeah.
parties are pretty fun. It's always hard to
Yeah.
be totally productive the next morning. The parties. So like, I think going to these events and like talking to people and finding out what they're doing, even, like a consensus, I saw you guys were reporting on your experience there,
Yes.
but I mean, you, you could shut your eyes and bump into somebody who was doing something interesting and tell you about a
Yeah.
project, innovation, or something they were doing. And I feel like the people that I ran into, like actually this morning, I had a couple of calls with people that I met at Consensus that, I might not have talked to otherwise, just bumping into them. So I
Hmm.
think those sorts of things are also really important. And like
Yeah.
just be educated on the regulation. Like the regulation is changing. Regulatory change is an unlock, right? And so, in my roles and my different jobs, part of it has always been to kind of not just see where the ball is, but to see where the ball is going. Because if you know if you have some idea about what is going to change and what is going to unlock, and you're sort of, building in that direction, then you're really going to kind of sync up to have an offering that will not only be commercial, but that will be regulatorily permissible.
Yeah. I mean, it's funny that you say that too, because I do recommend podcasts as well. And even like this Talking Tokenization series that we do has really developed this show into more of an on-chain finance show. And like the feedback and just like the views skew more towards tokenization and finance. Like people like this content and it is valuable, whether it's me or someone else. But I agree with you on that note too, and just like kind of diving into the resources that are out there. I think it's also interesting that you brought up the conference aspect too. And there's a lot we could say on that front. But I think, a few years ago, like many crypto native companies framed tokenization as something more designed to disrupt Wall Street. And now it feels like Wall Street is taking over or being like a very heavy hand in the conversation, which I don't think is necessarily a bad thing. It's just the reality, right? So how do you kind of view that shift and like the opportunity today with that in mind? And like so many people joke about how these conferences now have suits, and it's no longer like those weird zany people with like hoodies. I mean, I still see them, but you know what I mean?
Well, it's funny because going down to Consensus, it was sort of like, wow, I wonder how people are going to be dressing. Do I wear a jacket for this? It's like more trad buy, so there's more people wearing jackets, and then you look over and there's like some dude walking around dressed up like a wizard, right?
Yeah,
So,
they will
you know,
always be there. Yeah.
so look, I think it's a good thing that people in traditional finance have woken up to the possibility that blockchain will really make their services and their products better, and they'll bring efficiencies to their marketplace. So I think they see it, they get it, and they're adopting it, and I think that's great, right? And I think but you do have this. It's interesting the way you talk about this juxtaposition, because you sort of have like, there's like this crypto world that's moving to try to trade more traditional financial assets and to grab sort of securities and tokens. And then there's traditional Wall Street that's like, okay, how do we use stable coins and deposits, and how do we use blockchain technology, right? And they are converging. And it's funny, partially when I look at the regulatory environment right now, I feel like there is a little bit of a dual path in front of us. There's a path where there's sort of an exempt, like if you think about the exemptions that are coming, like the SEC is talking about this innovation exemption, and there's some sort of sandboxy type stuff that's emerging. And then there's sort of more sort of regulated traditional financial products and assets that are in the play. And they're kind of still operating slightly in different worlds. And I think one of the great things about sort of what I do and what Securitize does, like I sort of see myself as a bridge. I've been dealing with enough people in blockchain and crypto for several years now that I really understand it and the opportunities, but I spent my whole career in traditional finance. And so I find oftentimes when I go to meetings where both parties are at the table, like, it's kind of good to be a little bit of a translator between the two.
100%.
So look, it's great. It's great that they're coming in, and it's great that the crypto companies are challenging them in some ways and making them innovate and try things. Because honestly, if they don't evolve with this technology, other people will start to take pieces of their business and will start to disintermediate some of those roles. And so, we'll
Yeah.
see how that shakes out.
When you're having these conversations, like what are one or two areas where you find yourself translating it the most that people are still not fully grasping?
I mean, it really depends on who you're speaking to. Like, there are definitely people who just don't get it. They don't get it. They're like, our equity markets are the most efficient, deep capital markets in the world. And what can we be like? It's retail investors have it better than they've ever had it, and everything is free, and they get price improvement, yada, yada, yada. Like, why would they ever want to do this, right? And
Hmm.
those conversations still come up. Like, some people just simply, they don't get it. And so, you have to kind of go back and say, well, like, this business is going to change. Like, we have another generation of investors, and a lot of places in the world, there's more people with crypto wallets than with brokerage accounts. And people with crypto wallets are used to self-custodying things. They're used to doing things with those assets that you couldn't do with a typical equity security, right? You buy it, you see it on a spreadsheet or in your account, and you can't really do anything with it. And if the bank is lending it out, right, or they're hypothecating it for stock loan or something like that, you don't really see any money from that. And a lot of those things are going to change. It's going to be a lot easier to move securities around, to transfer them, to post them, to find other ways of getting value from them, finding yield from them. So there really is a set of use cases for investors that is increasingly compelling as sort of the base of products are built around that. Also for issuers, it's interesting, right? Like corporate issuers, when I was at JP Morgan, I used to advise issuers on like which market to list on. And, they just didn't always understand, like, even the difference between the New York Stock Exchange and the NASDAQ stock market, and why would they list here versus why might they list there. And so you imagine having a conversation with them that kind of goes like, well, okay, now we're going to tokenize your stock, and you're going to have a full line of sight into who those investors are. And you're going to be able to actually give them discounts or benefits or airdrops or things like that, where as opposed to before when they were just sort of hidden behind a brokerage account where you couldn't see, now you have some connectivity into them. And on top of that, like, the way that you vote in the future could totally change, right? The voting could change, the way that proxy distribution works, right? There's a lot of other things that are truly benefits for issuers. So I think that it's, in some cases people are close and they just need to be pulled over the line. And in other cases, you really just have to go high level and just explain to them why this technology just unlocks a lot of opportunities for issuers and investors.
Yeah. What percentage of people entering this space, not just through Securitize or the conversations you're having, but what you're observing across the whole tokenization sector, what percentage would you say are tourists that are kind of just chasing a hot narrative versus like people who are going to be a permanent fixture in this space?
So, you know, it seems like, so I'm maybe I'm just sort of, you know, I have this recency bias right now because, you know, talking to a very large financial institution, an offshore financial institution yesterday, it always starts with sort of the innovation team, right? So there's sort of an innovation team
Right.
that's kicking around ideas and trying to figure
Hmm.
out what we can do. But innovation teams or innovation labs, they're not always like the builders. It hasn't quite got to the core of the business yet. And so in those groups, it's sort of like, okay, well, you know, like this is one where we may be doing a project with them in 2 years or 3 years. But let's help them. Let's walk them through the process. Let's educate them. Let's point them in the right direction, and let's express a willingness to work because some of these are very large financial institutions. Um, and then in other cases, you know, they're very specific. Like we had one, you know, bulge bracket bank that came in and said, we want to start doing trading on tokenized securities by the end of the year. And that's like, awesome. Like
Hmm.
that's what we want to hear.
Cool.
You want to do
Yeah.
that? We want to work with you. Or somebody else might say, we want to figure out how to use the securities that we have in custody in collateral use cases. And how can we tokenize those and use those in collateral use cases? Awesome.
Yeah.
Let's have that conversation. So I think it depends, right? I would say that, you know, there are, you know, part of the tricky thing is that there's different models that there's different ways people are doing this, right? So we're not only explaining sort of how it works and what the possibilities are, but we're also differentiating what Securitize does from what some of the other actors in the space do, right? So
Hmm.
we have a very specific way of working with broker dealers and regulated entities to do things in a way that we believe is a very future-proofed approach. Um, and there, you know, there's some people who, you know, who might want to go sort of a little more, you know, deregulatory and a little more, you know, risky. And we just work that out in those conversations.
Yeah. I've noticed a lot of excitement around tokenized US Treasuries and private credit, and then just tokenized cash in general. What would you say out of maybe those three areas? I guess tokenized US Treasuries go under tokenized cash, but like, what would you say is the big opportunity there? And are you seeing a similar kind of interest? Like, are those kind of the main areas, or is there somewhere else that you're tracking a lot of demand?
So I sort of look at tokenization as an evolution across asset classes where the first real use case was stablecoins, right? Tokenized money and tokenized cash and the ability simply for payments and to buy things more efficiently with composability and so on. And the next one is tokenized treasuries, right? A very easy use case for tokenizing that, where people can have a tokenized asset that still gives you yield and very easy to move in and out of, right? So instead of just sitting in a bank account where you're making no money, being able to buy easily a tokenized treasury and get yield from it or be able to get paid. I mean, certainly when interest rates were 5%, that was extremely appealing. The
Yeah.
next sort of stage we saw was sort of in the private equity space. And so this is one of the reasons why Securitize, we tokenized with KKR, Hamilton Lane, and ultimately BlackRock. And certainly BlackRock was in the treasury fund space. We also did one with Van Eck. So those were really huge. I think there's sort of a big evolution now. Like you'll notice this about the new BlackRock fund is it is Genius compliant. So you're
Mm,
going to see a lot more people sort of saying, how can we be Genius compliant? Because we would like to be the underlying holdings behind stablecoins, right? And so there's a
yeah.
view that with Genius coming to play, and once that's fully in effect, you're going to see, you know, a proliferation of stablecoins and a lot more use cases for digital money. But to me, this is all just, you know, it's sort of like percolating its way into the traditional financial set of asset classes. And we're getting to a point now where, you know, where stocks are like next, right? Tokenized stocks are next. And so everybody now is looking at how can we tokenize stocks? What is the best model for doing it? How is the SEC going to unlock that? The SEC is spending a ton of time trying to figure this out. They put out statements on custody. They put out statements on what you can do in a transfer agent. They put out, you know, a lot of different things. Again, they're looking to do an innovation exemption as well, which is going to be very focused on tokenized stocks. And so I really think that you know, the end of what meets blockchain, there is no end. It's just simply a question of, you know, like how long does it take to get things on blockchain, and will everything move on blockchain, you know, slowly, or will it start to happen quickly as people
Mhm.
start to see a big issuer is going to, like BlackRock was a total catalyst for treasury funds. I'm not going to say the name, but there's like a couple of stocks that when they tokenize and when people start to see how that works and what they're doing, it's going to kind of wake up a lot of the other companies and a lot of the other participants in the market. And they're going to be like, okay, we got to be part of this.
Yeah. The one you're not going to say the name to, have they done it already, or they would be a new entrant?
Well, there's a lot of conversations that are being had right now. A lot
Come
of
on,
conversations.
Brett, give us something. You got to give us
I'm
a
not talking
name.
about a name that's already tokenized.
Okay,
No.
okay.
But I mean,
Yeah.
like, so what's really cool is like, like this week we had we're going in and we're sitting down with, bulge bracket banks and we're talking about, how do we do a tokenized IPO? How, like, think of it this way, right? It used to be that IPOs only went to institutional investors. And then gradually it got to the point where like, you know what? Why don't we give, 10% to retail? So we'll give it to like, Robinhood and Schwab and others. We're going to give like 10% of the offering to retail. And that's kind of a thing now. I think what we're going to see literally, within the next year or two is there's going to be, you know what? And we're going to give 5% to an on-chain investor base, right? And we are going to tokenize part of that. And, we're excited about that because as you know, with FINRA, we recently got an approval to help with IPOs and to be part of selling groups, right? And so we're really interested in being part of that. Okay, you want to sell that? Like, why don't we make that available to MetaMask? Why don't we make that available to investors on, I don't know, okay, actually name the exchange, right? There's different exchanges out there that are getting the license, whether it's in the US or whether it's abroad, but to essentially to be distribution platforms and also to provide liquidity for some of these assets. And I think that is going to unlock and going to be super exciting.
Yeah, no, I agree with you on that. You also brought up the innovation exemption before, and for clarity for our audience, no pun intended with the reference to clarity before, but separate, right? The innovation exemption is an expected regulatory safe harbor framework by the SEC Chairman Paul Atkins, right? And it's essentially allowing crypto firms, DeFi developers, TradFi, incumbents, whoever it may be, to kind of test and launch under like more of a safe harbor, would you say, without like immediate enforcement actions, right? I see a turn in your face. So like, what's your take on it? Did I interpret that correctly? And like, what do you think is kind of the reality behind this?
Well, so look, so people who are interested in the tokenization of stocks are watching this very carefully and very closely because the SEC has mentioned that they're going to come out with an innovation exemption for tokenized stocks, right? And so we're all wondering what it is. I mean, I think the first most important thing to say is it hasn't come out yet. It hasn't been published yet. So we don't know exactly what is going to be in that innovation exemption. There was an article published by Bloomberg very recently where they kind of came out and they said the SEC is just about to publish this innovation exemption. And they talked about certain aspects of that. And it's going to be controversial, right? It's going to be a controversial thing because you're talking about exempting market participants for creating venues to trade securities that are exempt from several of the fundamental regulations that pertain to traditional equity markets, right? So those exemptions could include, well, we're talking about going into these venues for tokenized securities and there's no Reg NMS or there's no consolidated audit trail reporting. And maybe there's no smart contracts that govern transfer restrictions, right? So can they move into DeFi? So it is something that's very, very closely watched. The sort of scuttlebutt on that is that like it wasn't going to be put out for comment. So oftentimes this will come and they'll put it out for notice and comment so people can opine on the pros and cons of it and give feedback, and the SEC can then revise it. But it's believed that it won't be put out for comment. That it could last for several years, right? And that it could be reasonably sizable in terms of what it unlocks. And so we're all watching very closely what happens. But right now, I think it's in a kind of a political phase where they're trying to figure out, how do they do this in a way that doesn't result in litigation or doesn't result in potential problems in the market, so that we don't want one step forward and two steps back because it didn't land right. And so it's really important that they get this right and they make it work for everybody.
Yeah. And we've talked about this throughout the conversation, but you've worked closely with regulators throughout your career and you know the space very, very well. So how would you kind of characterize regulators' comfort level with tokenization today versus maybe not so much in the past?
Yeah, so I mean, you and your audience knows that I was the director of trading and markets at the SEC from
Yeah.
2017 through 2020. So I was there for 3.5 years, and we oversaw, TM trading and markets oversaw, all of the stock exchanges, all the broker dealers, transfer agents, clearing agents, and that included across assets. And while I was there, we dealt with a lot of issues related to blockchain, and like T0 had come out and Overstock had come out and they wanted to tokenize. So we saw a lot of these things. At that time, it, there was indeed a different regulatory environment. And part of that was because there was just like, unfortunately, there were a lot of bad actors still in the place, right? In the space. If you see, there's frauds and there's thefts and there's hacking and there's all of these things that are going on, it makes everybody very cautious about sort of unlocking that. But I really feel like since then, in the last, 8, 9 years, we've really evolved and the market has come a long way. And so now, and certainly part of it's also politics, right? But, we're in a place now where I think that the value of tokenization is totally recognized by regulators. It's recognized by this government. And the tricky part is simply finding that right balancing act between how do we unlock innovation without getting rid of the investor protections and the other safeguards that we have built into our environment. And so, so it's like people come on, they talk about like crypto, and when people use the term crypto, they oftentimes don't differentiate between the underlying technology that can be used for securities and done in very responsible ways that sort of unlock all this innovation, versus when people think about, I don't know, like Terra Luna or Dogecoin or Shiba Inu or a different set of products, right? And so I think, that understanding has evolved. People understand the sort of the technology and the opportunities that are there versus some of the specific products. And the more that involves, the more that there's comfort. And I think the regulators are comfortable and they are unlocking it. And there's going to be some back and forth, right? I don't think what they come out with first is necessarily going to completely stay. But the SEC is not only doing this exemption, they're also doing rulemaking. So behind the scenes, they're trying to write rules, and this is where you have sort of a longer term, rule framework to build upon, and that is much more, long-standing than you'll get simply from an exemption.
Yeah. So maybe wrapping it all up, looking to the future, Brett, what does success actually look like for tokenization? What would you say would make the industry truly crossing the chasm into mainstream finance?
So it's funny, when I heard about this earlier and you said the term the industry, I assume that you mean the crypto industry, right? So I'm always like, which industry are you talking
The
about?
tokenization industry, but yeah, I guess we could say crypto, right? On-chain finance. I do bucket these things together, so I'm glad you're making me clarify.
That's okay. Well, so it's funny because, I spent a bunch of my career when in the early days of electronic trading. And I used to say that, we will have succeeded when people just take the word electronic out. It's just
Mm,
trade and it's just electronic, and that's just sort of taken for granted.
yeah.
Right. And so I think, in this space, it's the same thing. Like, nobody cares about, at the end of the day, investors don't care, like, what is the underlying technology that I'm
Yeah.
using to do this, right? They don't want to know, like, which chain is this on, or what is is this
Mhm.
blockchain or is this not blockchain? Like, it's going to be, use cases and applications that never existed before, that are good for investors, that are good for markets, that are good for, the issuers in the space, and that, we're going to just see, a whole new set of use cases that are unlocked that are going to be powered by and built on blockchain, but nobody's going to care like what is the underlying technology. I think that transformation is happening slowly but surely, but when it comes, you won't see that. But part of it is just like there's a lot of rents that are taken out by intermediaries today, right? And so I think like some of the cool things are there's people all around the world who don't have bank accounts, who don't have, the ability to buy U.S. securities or U.S. or stocks or even stocks in any other country, that if they have a phone, like if they have a phone, it will be great if they have the ability to say, you know what, I have an extra $10 and I want to buy Apple or Amazon or Tesla or something else. I want to buy a stock. And oh, by the way, while I have it, you know, maybe I can, post it here and, and get yield from it. Or maybe I can put it out for loan and participate in a stock loan thing that will bring me value. So, individual investors should have products and tools at their disposal that are created from blockchain technology with programmability and customization that they don't, the composability that they just don't have right now. And I think that will be really cool. I think we're going to see a lot more use cases and a lot more efficiencies in our marketplace. And hopefully at some point, the fact that it's on blockchain will be irrelevant.
It just exists. Exactly. Last two questions. What is something that you're watching right now, aside from everything that we've talked about, that you think others should pay attention to?
I'm really focused on some of the things that are going to be unlocked with tokenized stocks, right? So I actually think this question we talked about before with respect to IPOs is really an interesting one. Like, I love the idea that a company can go public and can access this whole new market and this whole new liquidity landscape. And I think that's going to start with companies that decide to, give 5% of their shares that they're bringing to market to put them on blockchain. And I think at the same time, you're going to start to see companies that are going to just do the whole thing in a tokenized form. They're just going to do a tokenized IPO.
Straight to it.
I think we're evolving to that. And so to me, a lot of that is sort of what is the underlying infrastructure and the build that is going to get there. And the other thing I would say is I'm very interested in regulatory harmonization around the world, right? And so this is a global market, right? A lot of people, when they think about the US equity markets, they're thinking about, our little universe. And in our little universe, like when I think about the equity markets, I'm like, we have the New York Stock Exchange, NASDAQ, and a bunch of smaller exchanges, CBOE and others, and there's smaller exchanges. And so we're up to like 19 or 20 stock markets. And so when we look at the pool of markets, it's sort of in this defined universe in the national market system in the United States. And I look at it like pretty soon that's going to open up, and that's going to include markets around the world, including crypto exchanges that have gotten licenses for securities that are unlocking access to investors around the world. So like in equities, people are talking about 24/7. My view is that, once you sort of enable these products to move on to all these other venues, you're going to see that, it is truly a global market. It is truly, 24/7, 365. And it's going to bring a bunch of benefits to investors. So those are a few of the things.
I love it. Amazing. Brett, last thing, can you leave us with a piece of advice, something that you've carried with you throughout your career?
I don't want to sound like too conservative. Like, I would just say this, right? Like, it's very important to look around the corner and to see sort of what passes the smell test, right? And so, like, regulation today, there's always a look back. Like, it's funny, when you look at a lot of the fines that come into the market, they're like 5 years later, right? And 5 years earlier, there's people who were sitting there saying, well, maybe we could do this, and how's this going to play out? And I think, having a kind of a normative sense about like what really is good for investors, and is this the right thing to do, and is this something that is really going to withstand the test of time? I think that's a really important way to think about things. It's not just about, how much can we, make a killing in the next 6 months or the next year. I think the more that we think about something that truly, sort of maintain some of those principles about fair and efficient markets and protecting investors and things like that, as we build, as we innovate, I think that that's important to keep in mind.
I love it. Amazing. Well, Brett, thank you so much for coming on today, and excited to see what you guys have next in store after all those conversations.
Awesome. It's a pleasure to be here. Thank you so much for having me, Jackie. Appreciate it.